Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our April market update. So this market update is coming out a little bit later than normal because we put out some really great content about the NAR settlement and how agents get paid. So we will link to those videos. I definitely recommend that you watch them. But let's talk about the Phoenix housing market and where we are at today. So the good news is that inventory has slowly been increasing. So most of my videos have had us in that like 11,000 range. Right now we are at 12,600 listings in the Phoenix area, which is great. That means that listings are going up. This is not because we are seeing more people sell their homes. It's because the demand has remained relatively flat as interest rates remain elevated. There's less buyers out there because of affordability, and so it's taking longer for those listings to sell. We're also seeing more price reductions take place. So sellers tend to price high. You know, they're riding a wave of appreciation, and there is appreciation. Home values are up, but they tend to list too high from time to time, and so they've got to back that down to attract buyers. So we are seeing more price reductions. So that's good news on the buy side. So you can negotiate and get better deals because you have more choices, and it's taking longer for sellers to sell. So we are in a higher rate environment, but I would like to say that this is our path to normalization. What existed during COVID was artificially low interest rates and was absolutely not normal. So we're still in the high sixes. We have been for most of this year. I know that a lot of us were hoping at the beginning of the year that we would see rates on a downward trend and that by the end of the year we would end up with something with a 5 handle in front of it. I still think that's possible, but it is not a direct path. It is going to be rocky along the way because life is messy. And so we are still hovering in that high 6% range. The economy is on a tear. We just had a kick-ass jobs report come out where the expectation was 200,000 jobs. We had over 300,000 jobs created. So the 10-year went up. The good news is the 10-year went on a tear, but mortgage rates didn't change much. That's because the gap between mortgage rates and the 10-year has narrowed. And so if we start to see a little bit of a downward trend on the 10-year, we will see mortgage rates come down for sure. So the good news is that gap has closed. The bad news is, and it's not even bad news, the economy just continues to be really strong. So people are working, the participation rate increased, the unemployment rate went down again. So we're back, we went down from 3.9 down to 3.8. This week we have inflation data coming out. The expectation is for it to come out at 0.3% month over month, meaning that inflation creeped up by 0.3%. So inflation continues to cool, which is what we want. So the economy in the United States is doing very well. The Fed also came out to calm the markets and stated that 3 rate drops are still on the table. So they are still predicting that they are going to do 3 rate drops, and they also admitted that monetary policy is extra restrictive. So they still have plans to do 3 rate drops this year. It's all going to be tied to what the inflation numbers come in at. So if that rate of inflation continues to cool, then we still will have those 3 rate drops this year, which will still lead to mortgage rates coming down. So what can sellers expect? We are in the thick of the spring season, but it's been a very muted spring season. We are actually down from this time last year. We are up though from last month to this month, but still down in terms of total transaction from this time last year. And last year was super low for total transactions. So this year is proving to be even lower in terms of total transactions. So not a ton, even though inventory is rising, not a ton of inventory and not a ton of buyers out there either. So for sellers, you really need to price your home accurately. As I mentioned before, we're seeing a lot more price drops take place. That's because sellers are overpricing their home. Buyers know that a home is overpriced. My general rule of thumb is if you've been listed for 2 weeks and have had little to no activity, you are priced way too high. If you've been listed for 2 weeks and you've had north of 10 showings and no offers, you're close, but you're still off, so you should do a price reduction. It really comes down to properly presenting the home and putting out a good product for what it is and pricing it accurately. We've had 3 or 4 listings here just in the past few weeks, even in a low demand environment, that priced it accurately, presented it well, and these weren't like amazingly highly upgraded homes. They still needed work, but they were presented well for what they were. All of them got multiple offers. So there are still buyers out there willing to buy homes. They're just not willing to overpay for homes. As long as you can afford the monthly payment, it is better to be a buyer when there is hardly any competition than to be a buyer when there's a ton of competition. I know I've been banging this drum, but this is an environment where buyers can get deals. They can get their closing costs covered. That's going to be super important come this summer if the settlement goes through and how agents get paid, watch my other video, goes through, and it's going to be really important for buyers to get concessions. So navigating that and getting concessions out of sellers now to help buy your rate down, cover your closing costs, negotiate on the purchase price, get repairs. It is much easier to do that in an environment where you don't have a ton of competition than to do that in an environment where there's a ton of competition. Some recent data just came out of the National Association of Realtors, and the #1 buyer pool right now is actually first-time home buyers. They make up a majority of the market. Some additional information came out and said that the silver tsunami that people have been talking about is non-existent, nor will it become existent. Most boomers want to age in place. They've got homes that they own free and clear or have super low interest rates on, and they're just not interested in moving. They like where they're at, and their plan is to continue to stay in their home and age in place. What we can expect going forward traditionally in Arizona when we get into the summer months and it starts to get warmer, I think this week we're pushing 90 degrees, we start to see a pullback in the market. I don't think we ever saw the upswing in the market just because of where rates have been. And so I think we're going to continue to see that, as we move forward, where things are just going to be slow and a bit of a grind. As rates come down, we see a lot more buyers return to the market the closer we get to 6%. And as part of that NAR survey, a lot of homeowners were surveyed, and they stated that they would be motivated to list their home and move if rates got to 5.5%. So again, that just reinforces my opinion that as those rates come down, you will see a huge return of buyers to the market because the demand is there. They're just not wanting to pull the trigger on anything because they feel that rates are too high and they're on the sidelines waiting for them to come down. We have seen it time and time again. As rates come down, that level of demand goes up, home values get pushed up, multiple offers take place. So really pay close attention to where mortgage rates are, and that is going to be your best leading indicator for what the housing market's going to do. Thank you for tuning in. If you are in the market to buy or sell, be sure to check out my other video. I will link it below about the NAR settlement and how agents get paid. I think that that's super valuable information. Otherwise, like, subscribe, and leave a comment. We'll see you next time.